Hello everyone, welcome to this live event brought to you by Link. Thank you very much for having us, Graham.
Thank you.
We're here to talk about community banking, where we will be having some examples of community banking around the world and looking at research that's been done by Martin here. Just so you know, we are recording this event and if it's possible, could you turn your cameras off and make sure you're on mute, otherwise you may pop up and be part of the event unintentionally. Which might be a good thing, but we've got enough talent on the panel for the 45 minutes that we have today. I'll ask the panellists to introduce themselves and we'll get into the details. So Martin, over to you.
Thank you. Good morning everybody. My name is Martin Kearsley. I am a director of a small consulting business called Realm Consulting. I was previously the banking director at the Post Office and have for the last 20 or 30 years been in banking technology companies around the world.
Great.
Thank you. Yes, my name is Graham Mott and I'm Director of Strategy for Link, the UK's ATM scheme. So I've been there for over 10 years now, and previous to that I was Head of ATMs at Santander Abbey National. Thank you.
Lovely, thank you both for being with us today. Bit of housekeeping before we get going. This is being held on Zoom. If you have any questions for our panellists, send them through. We've got a presentation, but we're going to kind of talk after every slide, so don't hold back your questions. I'll try and integrate them into the conversation as it goes along. And just a reminder, if you could turn your cameras off and make sure you're on mute, that would be much appreciated. The topic of community banking is an issue that I think everyone on the call is aware of, and it's one that's becoming more and more important as we move towards digitised services. We need to ensure that we have this analogue, face-to-face aspect of banking that perhaps has been missed from the broader debate around the future of payments. And I think this session should be very, very useful for everyone to understand what's been happening around the world and to get a better grip on what we could do to improve community banking here in the UK. My first question to our panel, I'm going to put this one to you, Martin, is how would you define community banking?
Great question to start with. I think what's very clear from the work that I've been doing is that access to cash is a huge topic worldwide for pretty much every regulator, every community, every economy. What we did was we looked at a number of economies that were broadly similar in their sort of geodemographic condition and socio-demographic grouping to the UK, so that we could do some sort of comparison like for like. Access to cash, hugely important. Access to banking, similarly so, but a lot less focused on by the regulators and the banks in their particular countries as a shared service. So I think community banking, I think, means more than access to cash. It means the ability for potentially those who remain digitally unbanked or digitally excluded to be able to access things like financial advisory services, pensions, insurance, savings policies and so forth. And if we focus too much on one, access to cash, and leave out access to banking and leave that just to online services, we leave out a large number of people.
Okay, brilliant. And Graham, you have supported this project through Link, the ATM scheme. What led you to support it?
Well, I think, as Martin said, the Link has been around for almost 40 years now, and its history and background has been as an ATM scheme. So this is, enable consumers to get their cash through cash machines, very, very well established. We have a big financial inclusion program that's been running for many years. But what that doesn't address, as was said, it doesn't address the face-to-face issues which many consumers have. Yes, cash machines, everybody understands that, and understands the facilities you can use, but there's still a requirement for face-to-face services. What we wanted to do was to try and see what was happening elsewhere and trying to see what had worked and what hadn't worked, and understand that broader topic, because for many people, yes, cash is fine and cash is important, but if they can't access face-to-face banking services, that can become a real barrier.
I think we need some slides.
I'm sure we do.
We need some slides to start to look into this great bit of research that you've done.
Okay.
Rebecca is going to pop some up so everyone can see them there. Thank you very much, Rebecca. And over to you, Martin.
All right, thank you. Well, if we, Rebecca, if you mind just stepping through a first couple. The exam question posed to me by Link was, with the success of the banking hubs in general in the UK, with that lack of access to banking, as we've just been discussing, are there services available worldwide from which we could learn and potentially propose to the providers of banking hubs in the UK? How do we extend those services? How do we expand those services and make the banking hubs even more useful? So we looked at a number of trials, as I mentioned, in particular economies and geographies worldwide. So we didn't look at everybody, but we looked at some that were similar to the UK. And what we found was that there's very, very few successful models outside the UK here. And we really wanted to look at why and what were some of the reasons behind it. And I think if we just move on to the next slide, in terms of the banking market, there's a number of key factors that bring them all together, and there is more chance of success. If you don't have one, two, or more of those different factors in play, then there is more likelihood that the trials would fail. So for instance, if we can quickly run through them without taking a huge amount of time on the slides, so we can get back to the discussion. If we look at the first one in terms of the banking market, we noted that in areas such as Ireland and the UK, where the concentration of banks has a large market share, so for instance, 4 or 5 banks having an 80% market share, there is much more likelihood of them working together and being able to work together to provide not just access to cash, but a shared facility and potentially banking services within that shared facility as well. Enhanced even more by having existing arrangements, potentially working on joint ATM schemes, working on joint payment schemes over the years. Their ability to work together clearly helps open up the ability to create a full common framework for a shared service. We also noted that in areas where there is a post bank, for instance Japan, Korea, fully funded post banks, there is, because of that availability of a single provider, it takes some of the pressure off the banks to have to provide that sort of shared facility, because governments and regulators working through that single owned post bank had access, if you like, to an alternative single provider already. Therefore the banks were to a certain extent off the hook. Equally, the cost-effective provision of cash and network support through the sort of history of those economies, if there was a well-established cash in transit network, a well-established mechanism for distributing cash, then quite clearly the ability to create a network was there. So banking market was one thing. Single network, single technology, a trusted national brand, whether it's a post office or whether it's any other brand. Convenience stores, sort of national footprint organisations, physical retail channels. South Korea and Japan, great case in point. There are tens of thousands of convenience outlets, all jockeying for position, many of whom are offering banking services. Certainly cash services is the opportunity to offer banking services on top. There is, although we couldn't find any evidence of that being offered. In Japan, the Japan Post Bank does offer full-blown accounts and financial services through all of its outlets. One thing that we did note is technology is not just enough. We've seen a couple of models, one created in the UK, one created in New Zealand, where there was a heavy reliance on non-staffed automated services. In one or two instances they're unbranded, and whilst access to cash, i.e. going to get your cash, is one thing, you can get it from anywhere. Once you walk away with your cash, that's the job done. You require a certain level of trust to be able to put your cash into something that you don't necessarily recognise and you've got no help to do. So if it's unbranded and it's automated and you're a small business taking your weekly earnings along and you're going to put it in, you need to be pretty sure it's safe. So there's no challenge with it being safe, it's just that in order to get the scale and the volume going, it takes a long time to get that kind of market awareness out there and the desire in the population to use it. So technology on its own isn't enough. Human interaction is key. And one of the schemes that we noted in South Korea, where some of the automated terminals now have video technology linking through to your own particular bank, absolutely broached that challenge between the physical infrastructure and what appeared to be a human interaction as well. Finally, prior partnered schemes, obviously things like Link and ATM schemes worldwide. If there's a shared common infrastructure and interface, then obviously it's much more straightforward to be able to connect up a new network onto that payment scheme.
we'll go into some discussion now.
Yep.
Is that okay? Because we'll stop the slides and come back to our view. Because there's a lot to talk about, and there's a lot more to talk about, but I want to make sure that we touch on some of these topics. Just as a reminder, are we going to share these slides?
Yes,
This is probably something we should have talked about before we started the event.
No problem.
But the slides will be shared, and there'll be a write-up. I'm looking to the wrong camera. The slides will be shared, and there's going to be a write-up, so don't worry about jotting down too many notes, but do send through any questions you have, because we'll try and get through to them. There's some really important things you mentioned there about what makes a successful community banking model. And I think it's important to note that every country is different, and we can't go for these one-size-fits-all solutions. But the work that you've done is very, very useful, because it shows that despite these differences, there are common challenges, and you can apply a solution in a different way to other countries. And you can see through what you've described there where things have gone wrong in certain countries. What I'd like to talk about first is this need to have a combination between technology and people, because in your report you mentioned that there was one example where they had all the gear. All the gear, no idea is the term that I would use for it. They got the best ATM to do all the stuff, but there wasn't a human person there.
Yep.
So actually, it was a redundant solution.
Okay. Shall I?
Yeah. Comment on that. Yeah, Graham, you want to talk about that as well? It's important to have this combination in order for it to be successful.
I think that the nearest analogy is when the airlines started doing print your boarding pass at the airport. When they first deployed the technology, there were many people around to help customers in their first sort of experience of it. And obviously once you've done it once or twice, it becomes kind of second nature. I think where a couple of the models in the banking side of this and shared technical services ran aground was simply the fact that they were launched unmanned and left unmanned to begin with, and said there you go, people will just use them. So without that kind of lead-in and that kind of assisted use for the first few, again, it just means that it takes a lot longer to get that whole service up and running. People have to sort of try it for themselves, prove to themselves it works, with no real assisted help. So in one instance, without implying whatsoever that somebody set out to sabotage the model, the fact that it was then, the particular model was then lowly used, had a sort of a low utilisation, was used by one of the sponsoring banks to say, see, we told you it wasn't needed, so it's closed. Yeah. So that one just simply hit the rocks because there was no sort of assisted help in there.
And that also shows why it's so important for any community banking solution to be well thought out, because if it fails or doesn't work, from both the consumer's perspective, if the experience is clunky or you don't feel like it's safe, you're not going to come back to it.
Yeah.
And if only you're the commercial bank that's sponsoring the solution, if it doesn't work, you're not going to continue sponsoring
Absolutely.
it. Graham, perhaps you could talk a little bit about that. And also, it's important, I think, that you touched on there, Martin, about branding and having kind of a known brand. Link is a known brand, and one of the successes is if you see a Link ATM, or you see the Link, then you know that's going to work for you. These are kind of really important building blocks for any kind of shared solution.
I think so, because for any consumer product to work, I think it's got to be very, very intuitive, which is why ATMs work so successfully. Is that they're very, very familiar. They look the same no matter where you go in the world. Every ATM is broadly the same design and deliberately so. The screen pattern is straightforward, and I think if you do any sort of research around this, people, it's one of those things they almost do subconsciously. They go to the ATM, they kind of press the buttons, and the cash comes out, and they don't think about it. They don't need to read the screens. They're so familiar with it, it becomes a sort of natural thing to do. So any alternative or any other technical solution needs to have that level of ease of use, and anything that requires complications or people aren't sure about, they'll just walk away from, and that'll be a massive challenge, which I think is where it's important, as you say, that they do have assisted use, because someone to show the person how to work it, to reassurance, that makes an enormous difference, because otherwise they'll just think they'll feel insecure about it, unsure about it, and they just won't use it again. So it's got to be really, really, really simple, because people don't think about it. Using paying in money or accessing cash, these are sort of facilities that people generally aren't spending too much time thinking about it. They're taking that time out of doing something else. So you're getting your cash out on your way to work, on your way to shopping, on your way home from school or college or wherever you're going. That's what you're doing. So in other words, it's a very compressed time period. It's not something you're spending time on. You want to spend time on it, that's when you need the face-to-face. Because as you're saying, you've got a bigger or more important transaction, if you get something about pensions or all the sort of things you want to do face-to-face, you might have concern about fraud or something like this. You're prepared to invest that time, and that's the sort of time they want to do face-to-face.
Yeah. I think as well, if I could just interject that one, we've spent years now persuading everybody in every economy all around the world to beware of scams and to beware of being defrauded. So that insecurity about trying something for the first time, not necessarily online directly with your bank, I think that's entirely secured, and the banks are working hard to make that ever better. But if you're expecting someone to walk into a shared facility and simply use a machine to get some advice on a financial service, there is that level of insecurity that unless I'm being guided through this by somebody who really knows, then I'm not sure I'm actually seeing the right thing, doing the right thing, pressing the right button and so on. And it does matter when it becomes quite a, if it's a lifetime investment, or if you're trying for a mortgage, you've got a family waiting to figure out what you're going to do with the house and can you move and so on. You need somebody there to help.
I'm sorry, just to interrupt. I remember it was a long time ago. We were looking at automated services compared with face-to-face, and one of the differences that someone described it is if someone's using automated service and it goes wrong, then they feel it's their fault. Somehow I've messed up, I've made a mistake, and it's my responsibility. But if you go to an assisted service with a cashier or an assistant, then you're passing over that responsibility. So if it goes wrong, it's their fault, and I know who you are because you're wearing a uniform or you've got a badge or whatever, and therefore you're passing that responsibility for a transaction, maybe very important, significant amount of cash, or you're concerned about it, you're passing that responsibility to a person, and that makes a massive difference and a massive amount of reassurance for people.
I've noticed that when banks invest in new ATM hardware, with the new kind of touch screens, it looks fantastic, and as an ATM nerd, I'm always excited to see it. But I do understand that if you're used to just typing your PIN in the keys and pressing those old buttons, that if you then went to this kind of iPhone ATM, it might be a bit of a jarring experience, and you would need someone there to help you. And once you get used to it, then you realise that it's very easy to use. I've got one more question or point to talk about before we move on to the next slide. I've noticed in the chats that there's no questions, but there's lots of comments about people not being on mute. I'm sorry that you would automatically put on mute, but if you could make sure that you are on mute, that would be greatly appreciated. And then whilst you put yourself on mute, think about a question that you might want to ask the panel, and we can get to that very soon. In the report, you talk about the conditions that are necessary for successful rollout of community banking. One of them, which might at first sound counterintuitive, is having a kind of high concentration ownership of the banking market by large banks. If you have a banking market that's few banks dominate, that's easier to produce solutions, and in countries where they have kind of a multitude of banks, which is great for choice as well, can actually be a bit of a hindrance when you're trying to roll out a community banking solution.
Yes.
Provide some thoughts on that.
So two examples, obviously the UK springs to mind, Ireland as well, and if you just sort of consider Ireland specifically, 3 out of the big 4 banks in Ireland chose to work with An Post to be a provider of cash, no banking services, just cash, through the An Post network, and it's counter within a counter type services. The fact that 3 out of 4 were able to make that a viable service speaks to the fact that those 3 have between them 60-70%. The 4th one adds another 10 or 15, so between those 4 that have 80%, 3 out of 4 was enough to get a good service going. It's still slightly fragmented because depending on who you bank with and what town you're in, you may or may not be able to use an An Post location. But recently, that situation has changed, and the 4th bank has kind of joined the service. So in that instance, 80% of Irish customers can get their cash from an An Post, from a single national network shared facility. That doesn't extend as far as banking services. In other words, it's still directly back to the bank for each of those. But the fact that those 4 were able to create that national service speaks volumes. If you look at something else, perhaps Germany or the States, where there are multiple smaller banks, state banks, town banks, national banks and so forth, there is no prior set of partnerships or relationships between them, so really difficult to get one going.
So just to interrupt, so is that the geographic spread? So in the UK, most of the banks are national banks that operate right across the whole country. Ireland, another example, but I could just see in a situation where you had lots of regional banks, trying to get those to work together is very difficult, because they will say, well, I operate in this particular region or this district, I frankly don't care about the rest of the country because all my customers are here and I can just focus on this one area, and there's not so much overlap that there is with a country like the UK where there's national banks and they operate in every community.
Yeah, I think just to that point exactly, let's talk about in the US, lots of local, town and sort of county banks and so forth. Great customer service whilst your customer is in their local facility. As soon as they travel away, they don't have federated services. They don't have the ability to sort of maybe access or certainly pay in their cash. So take your cash with you when you want to go somewhere and go somewhere else in your local area. Obviously that doesn't happen in countries where we have got those large national banks. Yeah.
Brilliant. Okay, let's have some more slides from Martin.
Okay.
Rebecca, if you could pop up, I think we're going to start on people power. There's a lot in this one. I think this is a very important one. And then we'll have a little chat afterwards.
You're right. I think, thank you, Rebecca. So on that people power, you're right, David, there's a lot in this one. A lot of this is down to, I can sort of personify UK people as being sort of slightly more resistant to change. But what we noticed across the world, different cultures and their acceptance of change really made a difference as to whether or not they could get politicians interested, whether they could, to a certain extent, resist the banks. Perhaps you understand what I mean by that, and say, look, I don't want my local branch to change, or I'm okay with my local branch closing, that's fine. So that acceptance or resistance really made a difference. 3 examples in there. In Japan, they're currently quite far behind the rest of the region in terms of the move from cash to cashless. But that's going to be accelerated rapidly in the next year or so. Some legislation has changed, which leads to salaries being paid automatically, much like we do in the rest of the world, but the real drive to get to that same sort of 13 to 15% remaining cash transactions in Japan over the next couple of years. And Japanese citizens quite comfortable with that, so that's fine, that's okay. In a way, you could see the same thing in Sweden. There was a desire a few years ago simply to move to cashless, and the population generally saying that's fine. What we did find was that there are a large percentage of 17 to 24-year-olds in Sweden who have never seen or handled some of the cash currency that has been in circulation for the past 6 or 7 years. So they simply don't need it. So there's a generational change, generational acceptance and resistance. In the UK, we had a much more coherent campaign against. There's a strong cash campaign which was able to galvanise political activity and industry activity to create new models and try new types. So what was interesting, and I think we touched on it a few moments ago, was that in populations slightly more resistant to change, there was much more of a demand for shared services and new services to replace the things that were being pulled from the high street. What we have also therefore seen is that in areas where they did allow the infrastructure to drop because there was less people resistance, if you like, we've almost seen the cash infrastructure collapse a little bit too far. So with the emergence of external political threats, saying no more than that for now, the ability for an external actor to disrupt automated payments and the payments mechanism meant that some of those countries are saying, actually, we need to go back a step and keep some cash under the mattress. So I think 2 or 3 of the Norwegian, Norway and Sweden, 2 or 3 of the Scandinavian countries, Finland included, have now said to their population, keep a week's worth of cash just in case. So too much of a move caused by, let's say, acceptance or less resistance to change has in some cases taken those countries too far and they now need to backpedal. Similarly, resistance to change can be a bad thing because we all know that digitization and digital services need to move ahead. If we want to get to 80% of the population is able to handle and transact digitally, we very much need to protect the 20% that either don't or can't get access to those digital services. So again, moving to the successful future can be resisted too much, but ultimately we need to take care of the entire population for the duration of that requirement.
Lovely. We'll put the slides down now and we'll come to talk about some of those. The external threats point is very interesting, and it's not, we could talk about it for a long time, but it is very interesting that Sweden are building 2 or 3 new wholesale cash centres. And I was also at a conference recently with central bankers, and one of the big buzzwords was having a national sovereignty over their payment systems. Really interesting, changing things. And the digital euro or the digital currencies is one way of doing it, but of course cash is also another element to that. There's something that there's legislation issues, we'll come to that later. There's something that I want to talk about, which is on this kind of people power issue, which is kind of cultural factors. We talked a little bit about the need for a kind of collaboration between banks, but in the work that you've done, is there also a big kind of reason, like a factor of like just generally how cultures work that leads to better community banking models?
That's quite a challenging question.
You don't have to answer it if you don't want to.
I don't know. I mean, there could be numerous cultural issues. I think all we've really identified through the work is that some countries have taken much more aggressive moves towards bank closures, branch realignment, reflecting the fact that populations generally are okay with moving on to digital or online services. Some countries have gone faster than others. That may well be because of cultural issues. I can't really comment on that. I know certainly how I think about UK people sometimes, I am one, and we can be quite belligerent and resistant. So there's all sorts of reasons for that. I'm sure there are equal and opposite reasons elsewhere in the world which would lead to quicker change. One thing that has resulted from it, though, I think, which is a slight warning sign, where some of these trials have been tested and have kind of either stuttered or haven't quite taken off in the way they could have done. One of the reasons is because when it comes to the regulatory side, there's been agreement with the banks to put a moratorium on branch closures, to say, look, it's all a bit chaotic right now, let's just stop. And I think the warning sign for that is that where the banks have said, yeah, fine, we'll put a moratorium until 2027, we won't close any more branches. When 2027 comes around, there will be a huge change. And I'm not necessarily sure that just pausing everything for a couple of years is the best way forward, because whilst bank branches are no longer being closed in some of those countries, unless there is work done to make sure that the cash infrastructure below it and the banking services infrastructure below it is ready to move on to another platform, when those banks come out of moratorium and shut loads of branches, there is no alternative. So it's almost like kicking the can down the road, I think. And that moratorium has been because culturally some countries have said, look, we don't like this moving so fast, please stop. So there are some cultural issues that then impact regulatory and then impact bank activity as a result.
Graham, one of the big successes of the Access to Cash Review, and I say this because I hear other countries talk about it, was what is quite an obvious point, but what I think has been lacking in maybe reviews up to that point was the Access to Cash Review involved industry and it involved like a good range of consumer groups. And that's been very important into finding a solution. Just maybe some words on how the role that played in.
Yeah, I mean, the Access to Cash Review is 5 years old now. It published its report just over 5 years ago now. And I think, yes, that was the makeup of the group was very important. So Link sort of sponsored it and provided the sort of funding and some of the sort of support for it. But it was an independent group, and as I say, it included people from banks, the central bank, consumer groups, very wide range of individuals, and it worked very sort of tightly to get a consensus. We had a particular panel with everybody working together, and I think the other thing which must be said is it had a champion. So Natalie Seeley was ran the consumer ran the Access to Cash review, and I think her drive behind it was important, was in fact vital impact. And I think, and I've said this before, what was really important was that the report was published and it wasn't just allowed to sort of sit on a shelf somewhere. And so much effort goes into reports, and often see great bits of work and it's published and it just dies. It just sits on the website and nothing ever happens. And what was absolutely crucial at that point was that Natalie continued to push forward for Access to Cash and ran it forward. And I think, if it was approached by, so I've said this in conferences and things like this, one of the key elements of success is, have an Access to Cash review, really good, make sure you get everybody involved, consumer groups, banks, all other stakeholders, but make sure you've got a champion to take that forward, because otherwise it will just sit and die. And if you've got a champion to take it forward, then you can move to the next stage when you start putting in pilots, and then as we've done in the UK, it then eventually becomes legislation, and not job done, it's an ongoing process, but now it's an established process, it's got a legal framework, and it will continue to run forward in the number of banking hubs, continues to grow on a practically a daily basis. So it's that continuity from having a great report, but then pushing it forward afterwards is the key. And I think getting somebody to champion that, because it's got somebody who can hold regulators, hold government, hold banks, hold the industry to account and say, look, you said you're going to do this, this needs to be done, we now need to do this.
Independent as well.
Actually independent,
That it wasn't from, but I speak to like Financial Services Ombudsman, but she wasn't a banker, and she also wasn't kind of associated in any way beforehand, and now she's a cash champion and still pushing it forward. Let's go on to your final few slides, Martin.
Okay.
I want to talk about this because legislation and regulation is coming up, and there's lots to talk about there.
There is. I mean, indeed, as we've noted, none of these things work in isolation. They all form part of this sort of big wheel of linked activities, and the government regulatory action or inaction, again, equally important. As we've just been talking about, Natalie, Access to Cash review, everything that was done to drive that report forward into action and do something has led to government and regulatory change, which has obviously taken 2-3 years to come through in the UK, but it's through and it works. I think I mentioned earlier on that obviously in the UK there is no post bank. There is a post office, but it's not a post bank. And one of the key things that we did find was that in areas where there is a post bank, Japan and Portugal, a couple of examples, there is actually a bit of a reluctance in banks to work with the post bank because it's direct competition. They offer account services, they offer what you might call normal banking. So where there's a post bank, there's less appetite to work together. But interestingly, the government's perspective of that is because there's a post bank, that is our chosen channel. If we need to insist on something to happen, we don't need to engage with the banks quite so much. We certainly don't need to legislate them. We can offer these services through our own post bank channel. So it does relieve pressure on the banks to provide an alternative source or alternative shared services. I mentioned earlier about South Korea with the proliferation of convenience stores and sort of Compin model. Each of those jockeying for their own position in their own communities. There's something like one convenience store per 1,000 population. Every one of the big population centres are absolutely covered with convenience stores. They all offer every kind of service, including in some cases banking. So post banks working through convenience outlets like that works well as well. And again, what we also discovered then was that if a government puts in too much legislation in terms of a very, very specific set of requirements, and that might mean anything from you need to have cash in and cash out services, you need to have financial service being offered, it absolutely limited innovation because there was no way that you could sort of offer a range of services or different approaches to those services. You had to stick with a particular requirement. So highly prescribed solutions really didn't get the traction. Light touch legislation, thinking of Ireland and others, saying we need coverage for certain distance and a certain size of the population. Up to you, industry, how you address that. Leaves plenty of room for a solution. So light touch regulatory and government oversight, I think, has worked quite well. And final point there, as we've talked about a few times, this is much more than just access to cash. I think that's covered quite well. It's covered very well in most economies because going to get your cash is a closed transaction. Once you've got your cash, out of your mind goes what was the channel I used to get it. But if you're putting cash in, or if you're a small business who's taking cash and wants to pay it back in, the cash cycle is quite important. Where's the cash going into? Do I trust it? Do I know it? Have the banks told me it's okay and I can use it? And then all of that sits on top of or instead of access to banking. There is very limited other banking services apart from directly from the bank.
Lovely. We'll move to we'll do your conclusion slide at the end.
Okay.
Is that okay?
That's absolutely fine.
So we'll drop the slides now, Rebecca. I think that's a really interesting finding. Again, it's kind of common sense, but it needs what we have the benefit of now is evidence. What other countries have done. It's very interesting to see this light touch approach being the one that's necessary. And I think it's light touch legislation combined with a strategy that kind of goes beyond the solution. Graham, you've been very close to what's happened here in the UK, and I know Link is associated with the rollout of the banking hubs. But how do you think the UK's done in terms of getting it right with legislation and regulation?
I think it's done very well, and the rollout of banking hubs as a shared face-to-face solution, I think, is a very good example for other. Other countries are definitely interested in how this works, and I think going back to the light touch model, I think that worked well because having had the access to cash review, there then were a series of pilots which took place in various parts of the country, and different models were tried, and that enabled the correct model to be established. So rather than just somebody saying, well, this is what we think we should do, go ahead and roll these things out. There's a pilot first, and that pilot phase means you can test the model, you can test what services will work. The model within the banking hubs, for those of you not familiar with it, is as a personal banker goes, each bank has a different day of the week, because obviously one of the issues with all of these shared services, well, if someone walks in the door, whose customer is it? Because how do you sales is a very important part of shared banking services. What people want, they want to go in and say, I need a bank account, I need a savings account. But how do you divide that sales up between the participating banks? And using a different day of the week works very, very well. As I mentioned, there's about 5 large banks in the UK. There are 5 days in the week, so that all works quite neatly. When you go to the banking hubs and visit, you've got HSBC on Monday, Santander, etc. on Tuesday, and that seems to work really well. And consumers, it's well branded, it's well displayed, and consumers very quickly get the idea, I need to go in on Tuesday because that's when my bank's in. I know I'm going to the personal banker, and I can get that face-to-face service. So I think that works very well, and I think that model has proved very successful. But it wasn't arrived at by accident, it was arrived at by trial and error, and a lot of planning and thought went into it. But I think that model works very well. But it's convenient. There are 5 days a week in the 5 major banks in the UK. If you had 8, it might become more complicated. Or if you only had 3, you'd have to think of a way of doing it as well. But yeah, I think as a model, it works very, very well, and it's a solution which could be very easily looked at elsewhere. Because there's, as I said, how do you get face-to-face services in an environment where there's not enough demand for it to justify 5 banks in a row on the high street? Some areas will can manage that, can justify that, but many towns won't nowadays. So therefore, shared banking services is the way to do it. Shared face-to-face banking services is the key.
It may be worth just reflecting back on New Zealand and Australia as 2 other instances where light legislation started, but the sort of light legislation followed by a sort of a bit of a fist at the end of it, if you like. In Australia in particular, a model was tried a couple of years ago by some of the cash and transit organisations, but it was potentially it was unbranded, and therefore it didn't really have full support, and it was left with this sort of question mark amongst the population using it. Think, what is it? Should I use it? And so on. That model, that trial ultimately failed, but the banks themselves, 3 of the big 4, not including ANZ, had an agreement with Australia Post, with a thing called Bank at Post, to offer cash services much like in the UK, much like Bidan Post in Ireland. So again, 3 out of 4 of the big banks sharing the post office network for cash. That was left alone to run as it was for sort of 2 or 3 years, probably unprofitably, don't know, but I suspect it was, such that the legislation has now taken a step forward. The Australian government just in the last couple of weeks has come to an agreement with the big 4 now. So they've brought the 4th one kind of into the camp. So all of those services will be offered through all of Australia Post, through the Bank at Post service. The model that didn't work a couple of years ago for shared services, I think, is looking to be renewed with with a model through Bank at Post in 3,500 locations around Australia, which now will have all 4 in there. But it required the government to kind of step in and say, we started off with light touch, need to be a bit heavier now, so and it's got to the right level. Similarly in New Zealand, there have been banking hubs tried, which were well branded, but because they were not supported, if you like, in person, there was what we said earlier on, that sort of struggle where it's automation only in some of those branches, even though it's well supported by both legislation and the banks, ultimately didn't get the footfall. So again, it just brings forward that light or heavy legislation regulatory being put with banks joining in and being very happy to help. Some of those things are not necessarily the only factors for success.
I'm going to ask you a question, and I'm going to just look at some of the questions that come through. So excuse me if I don't look at you in your response. I'm multitasking live.
And juggling as well.
Yeah. We talked about this before we started, and you mentioned on your last point here that there's kind of sometimes I think policymaking gets stuck in paradigms, and there's been a big access to cash paradigm, which has been great. It really has. It's come on a long way in a short space of time, especially people who've been involved in it a long time, like people around this table. Relatively speaking, a lot's happened very quickly.
Yeah.
But do we need to move away from the focus on access to cash more towards access to banking?
I think that's a very good comment. I think it's actually true. I think all the focus has been on access to cash, and part of the discussion in the past few years is trying to move the discussion in cash on from, it's not just about access to cash, but it's access for cash, either in or out. But the focus has stayed on cash, to the detriment, I think, of access to banking. In every model that we were able to find around the world, there's no legislation or regulatory engagement in what banking services should be provided, potentially through a shared facility. With a branch closure of any bank anywhere, that local community loses access to its banking services face-to-face. And there's been nothing really substantive to say, banks, you have to provide something online to replace it. The banks have done a tremendous job in providing online services, but again, as we mentioned earlier, that just focuses on those who are comfortable with going online and able to go online. It does not cater for the portion of the population that has been left behind. So I think your question, should we move on from access to cash, not just to broaden it out for the whole cash cycle, but to add to it access to banking for those who are unbanked and are lost in those communities that have no other access to it. I think that's a regulatory and legislative oversight right now, and it needs to be focused on.
A couple of questions coming in that I'm going to summarise, which pretty much say, do the banks need to do more to ensure that these services are continued?
Okay, I think they can do more. I think they've invested, as I mentioned, they've done a superb job worldwide in putting together online services for customers of their own bank. One model springs to mind in South Korea with, I don't know if I'm allowed to mention particular manufacturers.
Let's try it.
Might as well.
We'll leave it out on the recording.
Yeah. Hyosung have worked with one or two of the South Korean banks and put in place some branches with video connected ATMs. And it's again back to the people power, where one of the resistance points to the New Zealand models was the fact that New Zealand customers felt a lack of privacy was a problem when talking to somebody in a shared branch about their banking facilities or banking services. South Korea, different culture, different sort of outlook. In setting up these video booths, still in quite open areas, in shared facilities, great acceptance. I think this is great. I can actually talk to somebody at my bank, even though it's video, but it has got that sort of pseudo face-to-face link.
I was just wondering whether, just to interrupt, is that whether the COVID pandemic, 5 years old now, is whether that made a difference? Because I know I've seen the technology demonstrated for many years of video ATMs and stuff like this, and it's never really taken off. But that was before the COVID pandemic. Now, a much wider range of population is used to having video calls, but not just video calls for work, but video calls with their friends and family and things like this. And the apps themselves, video communication is much better. And do you think that, obviously the COVID pandemic was a worldwide event, that That is something that we're seeing elsewhere, that people are now happier to accept a video call with somebody which previously would have seemed very sort of, sci-fi, and I think that's fine. I can speak to my nephews or friends and family on a video call, and therefore speaking to a call centre on a video call, that makes sense, why shouldn't I do that?
Well, today's a case in point, here we are, global audience. I think you're absolutely right. I think there is much more acceptance of technology as an answer, and I think it all comes back to several of these themes. Each one in isolation won't make a successful model. You start putting a set of these together and combined, bank engagement, regulatory environment, the cultural side of it, the ability to get banks to work together. You start bringing these together and you have an entrepreneurial team driving the solutions, you end up with some very, very good solutions. And I think one of them absolutely plays into that post-COVID comfort with technology. So long as there's someone there to help you, be it by video or by somebody standing there helping you, I think people will accept technology much more rapidly than they did. So there is definitely that route through to the 80% that we want to see move to digital services sooner rather than later. The 20% left behind, I think they can be encouraged and they can be worked with these very innovative solutions to make that step.
We're running a little bit out of time, but I'm going to keep going for a few more minutes because I want to ask Graham a question, and then I think Martin will put up your conclusion slide just to wrap us up, if that's okay. So sorry if we didn't get to all of the questions, but we are going to do a write-up so we could include them in that. Someone was asking around research around what people want from the community bank. I wonder whether there's work to be done to say, okay, the banking hubs have been rolled out to date, are they working, what needs to be improved? Is that happening, or is that something that's...
Absolutely, I mean that will be Cash Access UK, so they operate, or they run the banking hubs with the post office, so the post office engaged there as well. And yes, they do a lot of research on this and trying to find out, what consumer satisfaction is, what are the services they use, what are the services that are like, and a lot of ongoing work with that. And I have to say, it seems very positive. In fact, amazingly positive actually. The satisfaction scores for consumers using the banking hubs is very, very high. And I've been to visit a couple of the hubs myself, and you're standing there chatting to the staff or whatever, and just looking at the various facilities. And consumers and customers will come up spontaneously and say, "I absolutely love this service. It's fantastic. I'm really pleased to see this here." So it's really, really positive. And they're doing a lot of research just to find out which of the services they want, and things that could be improved obviously all the time. Yeah, definitely.
Let's pop up Martin's final slide to see us out for the morning. No pressure, Martin.
None whatsoever. Thanks, Rebecca. So it really is just a pull together of the previous two slides. As it says, provision of a flourishing, well-used and focused cash and banking service seems to work best. It's not prescriptive, but it seems to work best when most or all of these bullet points are brought together, where the existing banks cooperate or already cooperate through formal multi-party partnerships. They can be brought together and in many cases voluntarily come together to say, what more can we do? That's very, very positive. Definitely works best when there are a small number of larger banks, use the word, dominating the local economy, much more so than when they're fragmented multiple banks. So existing multi-party relationships really work well. Common technology platform, the link rails in the UK, other payment platforms around the world, or schemes, when they can be utilised and these new services can be dropped onto those rails, again, a much more straightforward way to get going. Government legislation, so long as it's light touch, leaves room for innovation, the banks step up, so does industry. We've seen that all over the world, and it works really well. So, don't be too tight with the legislation. Coordinated entrepreneurial approach. I mean, what really worked best, as Graham mentioned earlier in the UK, was the access to cash pilots. But driving forward after the report was what really made that work. And again, a driven entrepreneur driving a focused team to actually come up with industry-based kind of neutral services, again, has worked well. And increasingly, a little bit like I mentioned about Australia, when you need to, you can step in and get a little bit firmer. Same thing in Finland, when they're worried, concerned about external threats. Every now and again, the right step at the right time says we need to protect more of cash. We need to get all of the banks involved. We need to step in and be a bit more legislative. But being aware of those threats and helping industry respond to them, bringing those points together makes for a successful model.
Lovely. I don't think there's anything more I can add to that.
Thank you very
much. That was great. Thank you very much for joining us. As I said, there will be a write-up and the recording will be shared, and we will get to some of those questions that weren't answered. Thank you very much, Graham.
Thank
you for hosting us today.
No, thank you.
Thank you very much, Martin.
Pleasure.
Thank you, Matt, behind the camera, for sorting out the tech under harsh conditions this morning. And thank you very much, Rebecca. And thank you very much for joining us. I hope you have a great day.